Welcome to Retirement Income Options with Kirk Spano over at Margin of Safety Investing and at Fundamental Trends. So, one of the things that I try to teach is patience, and I do it in a number of ways. I preach it, but then hopefully my behavior exhibits it. While a lot of people like the rah rah type, I try to put as much of that out there as I can tolerate. But I grew up watching Robin Yount. And Robin Yount of the Milwaukee Brewers, Hall of Fame shortstop, two-time MVP at different positions, shortstop and center field, was not a rah-rah guy. And he was my idol as a kid. So I'd go to Brewer games from the time I can remember, so whenever that is, 4 or 5 years old. And I remember him as a rookie in about 1975. In fact, I think he was the starting shortstop, a game that I went to and sat in the bleachers, and this is a big story, where George Scott and Henry Aaron might have been the only time they did it, hit home runs in the same game. Now, I remember that game, not only because of that, because I remember the home runs. One of them was the right field, and I think the other one was the left field. Probably George Scott to right and Henry Aaron to left. And I'm almost positive Robin Yount was a rookie that year, or maybe second year. And I remember being at a barbecue at my grandmother's house, the one that passed about a year ago, Grandma Pat, the one whose bathroom window I used to crawl through to unlock the house when my parents wanted to break in with their friends and drink the beer. And I was chewing on a bratwurst. And at that age, probably 6 actually, I wasn't a big fan. And we drove from 77th and Keefe, about 5 miles from the stadium, down to, at the time, Milwaukee County Stadium. Got in line, got tickets, sat in the bleachers, which is what we always did because they were like, $2 tickets at the time. And my dad looks down at me like the second inning. He goes, "What are you chewing on?" I didn't answer. He goes, "Is that the bratwurst from at Grandma's house?" I was like, "Yeah." He goes, "Swallow it or spit it out." And I swallowed it because, I had the fear of God in me at that time for my parents and every uncle in the family and grandparents. So that was about a 2-hour chew. I was, the inner Wisconsin cow had hit me. And I guess maybe that's part of when I started learning patience. I just chew this damn thing long enough, it'll eventually not taste bad. And instead, I turned it into a really probably gross bratwurst gum. Anyway, patience, patience, patience. I need you to learn patience if you don't have it. I can tell that some people are impatient and anxious from the questions they ask. I know that a lot of it is just newer people catching up, not having heard me talk about things before, or, only being able to read the last 4, 5, 6, 7 articles when they sign up, versus going all the way back to 2017 and 2018 and 2020, when a lot of forecasts that I made were those longer term forecasts. I said, we just have to watch how these things develop. And now over time, a lot of these things have developed. And some of the hype cycles have played out. Now we're on the slopes of adoption, enlightenment, depending on which Gartner cycle chart you're looking at, or copycat chart. And the reason we need to be patient is because the market will give you opportunities. It might not always be the opportunities that you expected, but they will give you opportunities because the market is dictated by big money, which is where we really are trying to look for signals, and then by the madness of crowds, people who come in late, that come in underinformed, that come in susceptible to trader narratives and television and Twitter and Discord and Reddit, swaggy stocks, blogs from people who make their money regurgitating something that they read versus doing real analysis or investing. That's the thing that bothers me about the financial press right now. It really has expanded, and it's because it's pretty well paid. As a freelance writer, you'll probably make more doing finance writing than anything else, unless you can dominate a niche or a niche. How do you say that word? Niche or niche? I usually say niche. Number one. All right. Niche sounds pretentious to me. Oh, Larry. Niche. In any case, I want you to be patient because the market will give you opportunities. And right now it's giving you a great opportunity in clean energy. If you read some of the chat posts that I've put up here and there, you'll have noticed some of the different stories. First of all, the investment tax credits that are out there and the production tax credits that are out there really are driving development in the United States. But not only for American companies, but foreign companies that operate here. So there is a lot of movement, and I've chosen to start using the ETFs because picking out the companies is really hard. And there's only a handful that I think have upside that's great enough to buy the stocks and absorb that single stock risk, right? We really don't want to take single stock risk unless we see some sort of asymmetric upside. So when people hear me say, don't invest in the middle of the market, that's largely what I'm saying. You shouldn't be taking single stock risk unless you think you can really beat the index. Now, for dividend investors, if you can beat the index by 2 to 4 points a year, that really is going to make you a top 10% investor. And if you're a growth investor, you're looking for absolute annual returns over a long period of time in excess of 20%. In my career, my growth accounts and my account have grown at about 25% on average. And I haven't been a great trader. I've become really good at it the last couple of years, and Shooter is a huge influence that has helped me a lot. Somebody just put in the chat, Nietzsche, it's French, it is pretentious. French. I was watching Anthony Bourdain again this weekend, and he was in a couple of Paris area towns. I gotta tell you, that is so high on my list of a place to go. I think that's going to be one of the 4 to 6 week vacations that we take at some point. In any case, patience, right? It's just like Marsha, patience. Gotta have it. And if you don't, you're probably going to have a problem as an investor, and you'll get destroyed as a trader. So what do we want to focus on today with the options expiration update that several days late because of Thanksgiving? First of all, we always have to remember to use the volatility to our advantage. You don't have to go in and make a trade right now. If you enter a trade with a good till cancel order, and then you go out and do something else, and come back and check the next day, maybe it's hit, maybe it's not, maybe make a small adjustment, maybe you don't. But the way that I have this designed is that you can order your 4, 5, 6, 7 orders a week, whatever the case might be, in an hour. If you read the article, you're already caught up on the basic research. You enter your orders after you take a look at your portfolio, and in about an hour, you're done. And spend a half an hour a day coming in to check any new news, any movement, anything weird, anything hit, anything I should adjust, and you're done. I think that if you use the retirement income options program correctly at Fundamental Trends, or if you're using margin of safety investing correctly, you should be able to manage your money in 4 or 5 hours a week. That includes reading time and entering orders, glancing at your portfolio. And in those 4 or 5 hours a week, you're looking at around 200 hours a year. It'll be the best part-time job that you've ever had. You will crush minimum wage. You might even make more hourly than what you make at your real job. And that's what we're trying to do. We're trying to make hundreds of dollars an hour based on the amount of time that you put in. That's why you use me as a funnel, because I'm doing this 50, 60 hours a week. With reading, it's in the 60s. But again, I enjoy the reading, and I usually just stop when my eyes start to sting. 4 or 5 hours a week should add a lot of money to your bottom line over time. Grinding it out, being patient, selling your batches of cash secured puts and covered calls to just generate premium, cut a little risk, add some positions at good prices. That cycle that we have, taking a starter position, selling a cash secured put at a lower price. If it gets put to you, great. If it doesn't, that's okay. You do it again. When your stocks run up to an overbought and overvalued spot, you trim them back down from whatever they grew to. Maybe they've grown to a full position or a double position. Trim them back, sell some covered calls, rinse and repeat. Now, you should have 4 or 5 months a year, maybe 6, where you have a lot of options activity. But usually, every month that you have a lot of options activity, you'll get a month where there's not a lot of options activity. Why? Because we're writing our options 2 to 3 months out on average. Every now and then we stretch a little, but in general, you should be able to recycle a position 3 or 4 times a year. That doesn't mean you're selling out of the stock completely or making big asset allocation changes. But for example, if you own Ford and you've sold puts on the dips, maybe not a lot more Ford has gotten put to you because, it jitterbugs around. And if you get a little bit lucky, you might write 3 puts on Ford in a year, collect $3, $4, $5 maybe in premium. And this is on a $10, $11, $12 stock. I mean, think about how much money that you've made in the last couple of years, even though the market hasn't been great. I mean, if you throw out the Magnificent Seven, the stock market's nowhere near its 2021 peak, which is why Shooter and I are pretty bullish. He likes the technical setups. I think the Fed has to loosen up next year. And we have a lot of stocks that have replicated that period in time that in the last few years I talked about a lot, haven't lately. But that 2014, 15, 16 period where the stock market basically just chopped around for 9 quarters, it's pretty similar to what we've had in the last 2 years. The market peaked at the end of 2021. I forget the exact date. It might have been November. Chopped around for a couple months really, during Santa time and January effect time. Then by February, it was really rolling over. We got a good 20% correction, even with the Magnificent Seven. And this year, we've had kind of a wavy market, and there's been a change in leadership. And what I've said was coming has come. We are there now. It's not speculative anymore. It's not a forecast anymore. The mid caps and the small caps are starting to lead. When the liquidity in the market gets looser, when the Fed lowers the Fed funds rate a couple points, which I'm pretty positive they'll do next year, I think it'll be faster and harder than the big banks who are always looking for symmetry. As we talked about in the webinars on Saturday that I got published yesterday, the markets have really been great for option sellers. And I'd be curious to know what some of you made in the last year on your option premium. I have one client that I know said that he was down 17% on his stock holdings, but his portfolio was even. So the securities, stocks and ETFs were down 17%, but his balance was the same as the start of the year. That means he made about 17% writing options. Imagine what that looks like in an up year in the stock market. Because again, if you weren't just heavily invested in the Magnificent Seven, you probably haven't made a ton of money in your stocks and ETFs. This last rally put me healthy to the positive side for the year. And with the option premiums on top, feeling pretty good. I think my January fees might be a little bit higher. I'm like Ken Fisher in that when you do better, I do better. I'm not like Ken Fisher in that I'm not a schmuck. So in any case, took a day off from picking on Ken Griffin. Picked on a different Ken. Enough already. All right, let's take a look at some of these options. First of all, clean energy is oversold and unloved. It's undervalued. If we took a look at some of those articles that I posted in chat about China and their solar farms, about the tax credits in the United States, about the improvements in battery technology, the big shift to sodium-based batteries. Remember a few weeks ago, I talked about how we have the ability right now, just got to get the capital in place and then start producing. We have the ability to desalinate with a net positive energy outcome, meaning we'll get more energy out than we put in, and we'll get byproducts that create fertilizer and batteries, can be used to salt the roads in the north. And by the way, it gives us fresh water, and I guess it lowers the sea level a little bit, which is probably good. Start reading about that paradigm. When the United States starts desalinating, what will be not only the effects on water, but on energy and agriculture. That's a pretty big interconnected market, isn't it? Food, energy, and water. It's almost like we need those things. That is going to be one of the top things I read about in the next couple of years. Now, I'm going to throw out a forecast here just to sandwich it in case I'm wrong. I can go back and edit it out. I'm not positive, but you know that I'm pretty connected to both political parties. I have friends on both sides. I've given to both sides. I've worked for both sides. I'm a centrist. I'm trying to pull people to the middle, which used to be incredibly frustrating, and now I just find it incredibly amusing. I'm pretty sure that President Biden, a couple of weeks before the Democratic convention is going to retire. And the convention is going to pick the next presidential candidate for the Democratic Party. And it will not be Kamala. I'm not sure who it'll be, but you've heard me mention a couple of names in the past. So we will see. I'm almost positive that's the way it's shaping up, because even though I think President Biden's done a very good job, he's going to be 82 next year. And ageism is real. And frankly, the stress of that job is huge. I think we've all seen how much it takes out of him, even though he's in remarkably great shape for somebody 82 who's had a rough life. And I say that he's had a rough life because stress is the number one thing that'll kill you. You can't tell me that this guy hasn't had high stress levels. But that's what I'm saying right now. Now, if that's the case, and it ends up being a Democrat 50-something or 60-something against Trump or somebody else from the Republican side, I think if they get the right Obama-esque candidate, you are going to see one of the mega rallies and booms in American history. I think we're lining up for that anyway. But if we get leadership that inspires confidence to the moon, and that just goes along with my bullish thesis about America and American exceptionalism, the true underlying strength of the dollar, altruistic leadership, and that makes option sellers a lot of money. It does. Because if the market is choppy but up, speculators will pay you a lot to sell them puts and calls. And you can consistently beat the market with 10 to 20% less risk. That's a big deal. All right. So in the very, very short term, what do we have to worry about? Well, I think the number one thing we have to worry about is if Jay Powell goes Grinch. I don't think Jay Powell is going to go Grinch. You know, if you think about the three types of uncles you have, you've got the one that puts money in his hand and he gives you a handshake as he's walking by and you end up with money in your hand. I don't think we're going to get that Jay Powell in December, but we'll get him sometime next year. Sometime next year, Jay Powell is the guy that has money in his hand and he gives you a good handshake. Then you've got the cranky uncles, maybe the ones that are a little creepy even. And I think that Jay Powell has a hard time being creepy, but he doesn't have a hard time being cranky. I don't think we're going to get mean Jay Powell in December. I think we're going to get the Jay Powell, the Uncle Jay, who comes in, says hi, asks you about your day. How are things going with the kids? Hey, that's great. I'll see you later. He's going to come. He's going to eat. He's going to say hi, exchange some pleasantries, and be on his way. I think that's the December meeting. And that'll be good enough for a really good Santa Claus rally and January effect. Now, Santa Claus rally and the January effect are pretty regular, almost every year. That's why the fourth and first quarters are the best quarters of the year to invest. It's not because the whole quarter is great. It's because December and January are typically pretty great. And I think that's what we have coming. I think we are going to get a heck of an upside rally here. You've seen TLT rally a bit, right? Rates coming down. And then if rates in the short end really come down later in the year because they have to help out the banks and the U.S. Treasury market, setting up for the special facility of all rallies, right? Don't call it quantitative easing. It's a special facility. And that's how they'll get all that money into the market. All right. So TradingView, I've showed you why I love TradingView time after time. I love to be able to screen, right? Take a look at the weekly or monthly chart and what's super oversold. Pfizer, Teladoc, a bunch of the clean energy, a bunch of the satellites. See, now Walgreens is oversold on the monthly. And the last time this happened, they got a bit of a rally. Here's the problem with Walgreens. They've really broken that company. I know a lot of people that work at that company, and it's really broken. I don't think they can fix it anytime soon. I think really they're going to have to threaten to close a lot of places or get bought out. Not really sure. I mean, I guess that would be the speculative trade on Walgreens that somebody's just going to buy them out on the cheap and try to fix them. So TradingView has a Cyber Monday sale. This is the best sale they have of the year. Nothing comes close. If you don't have TradingView and you're an option seller, get freaking TradingView. You'll make 2 or 3 years subscription fee back on one trade that you find that you didn't otherwise find, or that this helps you to understand, so you pulled the trigger. Go ahead and click a link. It'll make me about $1 and get your discount. And you do not need the premium unless you're a day trader. All you need is the plus, which is cheaper. Option Strat. I have fallen in love with this one since Shooter introduced me to it. If you're in the rare chat room, click on his link, not mine. So he makes the dollar. But I love these charts, right? It shows you in very easy graphical representation something that I was trying to use spreadsheets to do and I gave up. It lets you toggle strike prices, expiration dates, see where the break even is, what are your chances of making a profit, what the downside is if the stock keeps sliding. Just love this one. So again, they have specials. Their specials only 25% off, and it appears to be their best one of the year. I use the live flows, which is considerably more expensive than the live tools. I think the live tools is all you need so that you can do this. However, the live flows has historical option history, which pretty much you have to pay for everywhere. TD Ameritrade used to have it, and I don't know if Schwab's going to add it. So double check at your brokerage if you can get historical option data, like what were the prices on certain days, what was the volume on certain days, how did open interest change. If you can get that at your brokerage, then you do not need the live flows. You just need the live tools. I get the live flows because I like the alerts and some other stuff. You don't need it. Option assignments last month. I had some Sun Power put to me at 9 at a net cost of $650. I plan to hold it, but not add to the half position. I will be using the Invesco Solar ETF. I talked about this a little while ago, and I'm about ready to get into 10. I had some Enovix assigned to me, net cost of about 10. I plan to hold that, and it's a very fast-moving industry, right? Their battery architecture allows them to change the materials. So if sodium becomes a bigger deal, I would expect them to get into that. However, the smaller the battery size, the more likely that it needs to be lithium. So for car batteries, which it looks like they're getting into, your short range vehicles, the ones that maybe only have 100 to 200 miles range, could probably go sodium. Anything that you want a longer range on is going to have to stay lithium. But once you get bigger than car size batteries, think energy storage for the grid. Everything's pretty much going to go sodium because, as we've talked about before, when we talked about flow batteries, size doesn't matter, right? For energy storage for a building or for the grid. So we're going to see huge shift in these markets with lithium and cobalt and nickel, dramatic reductions in the projected demand, which is already happening. And we first talked about this when Tesla dropped the bomb. Was it early this year or early last year that they are moving away from rare earth metals? And I said that I don't think they can get completely away, but I think that they can make them way more efficient, which is what they're doing. And everybody thought that the Ford scaling down of their battery plant had to do with lack of demand. It's not. It has to do with changing technology. So they don't want to get too far out in front because they know the technology is going to change. If they can shift from having a Chinese partner on the batteries to an American partner on the batteries, they'll do that. They just wanted to make sure that they had enough batteries for the next 5, 6, 7 years. By 2030, the batteries are going to be so efficient. And again, the price of an ICE vehicle and an EV are going to continue to converge. And by 2030, I'm almost sure that the EVs will be the same price or cheaper. Remember, a lot fewer components. So if they can lower the battery price, think about what the upside is for the companies that do it well. All right, I had Enovix put to me. I had Rocket Lab put to me. I love Rocket Lab. There was an article posted in chat by somebody about the vertical integration at Rocket Lab. So Rocket Lab, well, actually, that might have even been just one of the analysts that I read. The vertical integration at Rocket Lab is basically similar to SpaceX. They're the only other ones that are on the same path as SpaceX. They're behind, they're newer, but they're going to be the number 2 competitor. And then we'll see if Jeff Bezos' company catches up at some point. So I really like Rocket Lab, and I think of it a lot the way I think of Ford. I just think that these are going to become the number 2 competitors to those Elon Musk companies. And they're going to have really huge growth rates over the next 5, 6, 7 years. And Ford, of course, has real estate thrown off. So Ford, February $10 puts. If you can get 50 cents, then you're probably doing all right. But these are my outstanding options right now. I thought you'd like to know that. So this will be a regular feature every month. So I got outstanding. I would expect the Fords to expire. The Teledocs look like they're going to expire. I showed you my stock position here. And the stocks of the week article tonight will have all my stock positions. Paramount, I think that's going to expire. I really think it's going to run up a lot in the next couple of weeks, but we'll see. If I get Paramount put to me, I'd be pretty happy about that. Occidental is under $60 today, so there's a put you can sell. Permian Resources is the next big acquisition in the Permian, I think. Block, Enovix. Block really ran away. So it got harder to sell puts because a lot of our stuff went up. You might have to wait on this stuff. Ford, if you can get a buck for the February 10s on some volatility, do it. Occidental Petroleum, I think, is the one that you should run right out and try to do this week because you can almost get $3 for a $60 February put right now. In fact, let's take a look at Oxy. Give you an example. So the February 60 getting 275. I would put the trade in at 3 and see if it gets hit. But if it starts to move up, just, execute it. So this will be one you have to keep an eye on. But try to be greedy. Try to get to 300. We Energies, I love this company. I just think that you need to have a piece of American Transmission. If you are a dividend investor, this is the utility you want. It does nothing but go up and increase its dividends. An American Transmission company isn't valued at all by the market. I know this company well. It's a subsidiary. They've been buying it up. We're going to buy up the rest of it at some point. An American Transmission company is worth a lot. Very few people know it, which means that the market is undervaluing this company. And by the way, you can collect a dividend. Start by taking a starter position and selling a put. If you are a retired dividend investor, you will never hate me for this one. Growth stocks in range of put selling. Ametis, as usual. AST Space Mobile, they moved up their launch for their satellites. We talked about that before. Make sure you have some of this, but go ahead and sell some puts too. Probably just going to collect premium because I think the stock will go up. Enovix, Rocket Lab, Teledoc, SunPower, Sunrun. I'm going to use the ETFs for clean energy, but SunPower and Sunrun have unusual upside. Nobody is assigning any value to the residential solar market. That's going to change. And between now and then, this might be the cheapest you ever see these again. If liquidity loosens up next year, if there's more liquidity, these will rally again. Just take a look at their charts, and what you'll see is a waviness that is pretty hard to deny. So a lot of the micro and small cap stocks have thin options markets. Just own Ginkgo and Spire and Black Sky and Planet Labs. Even if they're just starter positions, that's fine. Wait for them to rally if you want before you add more. Generac took off on us, so that's out of range again for a little bit. If it makes a move back towards 100, maybe sell some puts. I should probably just get more of a position. I love this company going forward on energy management. That is a highly volatile market. You have to engage in some position trading on all these clean energy stocks. Palantir has rallied. They're doing the right things finally. The things we talked about 2-3 years ago is when they reduced their stock-based compensation, the stock would probably rally. Well, that's what's been going on. I think it's a little bit overextended right now, but if it gets back into the mid-teens, then we probably sell puts again. Block Square ran on us. Again, just one of my favorite stocks. Warner Brothers, Discovery, and Paramount. If you believe in the takeover story for next year, then you have to own these. Stop selling the puts at this point. Make sure you own them. ETFs in range. Invesco Solar. I think you want to start selling puts on if you haven't already. And the iShares TLT has really rallied. Now, this isn't anywhere close right now. But if on chance we do get J. Powell the Grinch, maybe we get another shot at this. Shooter says the charts are set up for this to happen. We'll see if J. Powell takes the Grinch side. So really the entire clean energy complex is oversold and undervalued. QClean, PBW, iClean, they're all out there for you. iClean has some Chinese exposure. PBW is the one that I get my broad exposure with. And I think there's a good chance that I buy some QClean soon. The option markets aren't great on all of them. And interestingly, on iClean, the options are really, really cheap. Nobody is speculating on it going down anymore. That's usually a pretty good sign when the premiums dry up that a bottom is in or roughly in. And this is happening across the board. Clean energy has to be added to now. Hear it? Red Flintstone pounding the table. You have to add clean energy right now. Covered calls, same as last time. I didn't even check the prices, but these are all stocks that are overbought. So sell some covered calls on these if you own them. All right, closing investment thought. There's usually a little less money that goes into the market the fourth week of the month. That's been historical for the entire 30 years of my career. Usually on the 28th, the afternoon, usually. Inflows back into the stock market pick up again. So by tomorrow afternoon, you can see this market rallying. So take a look at what you're doing and try to get it done. Again, the risk is if Jay Powell goes Grinch. If Jay Powell screws up the Santa Claus and January effect rallies, then that probably means he's afraid of something. Or he knows that he has to put money in the market next year. He just doesn't want it to run up until then. I'm not sure. I don't see a Grinchy Jay Powell, but it could happen. All right. All right. Take a look at your portfolios and expect to get some good opportunities here if you're patient. Oh, I got a late question. Is it time to reduce some GBTC? I just put out 2 videos telling people to buy Bitcoin. No, you should not be reducing GBTC or Bitcoin. It's going to triple in the next year or 2 or 3. Now, we might switch from GBTC to another Bitcoin ETF at some point. It'll probably just make sense to go to the cheapest one. Maybe that ends up being the iShares, but we'll see. ARK, they're going to have a Bitcoin ETF at 80 basis points. One of them is going to get priced at 75 basis points. I forget which one. GBTC will become cheaper, 1% for sure. It's higher now. And I would guess that the iShares Bitcoin Trust ends up being a half a point. That'd be my guess. So you're going to have a price range between a half point and a point on the Bitcoin ETFs. Grayscale will probably remain the highest because they have all the business right now, but they'll have to come down quick or lose their business, right? It's 3 clicks to switch. So no, do not sell anything Bitcoin related right now. But, we might have to switch when we have that alternative. All right, have a good day. I get to go pick up my truck that I am putting on Cyber Monday special on Auto Trader. So we'll see if I can get this thing sold now. All right, take care.